If you're an RIA or looking to become one, Schwab Advisor Services is the Watson to your homes. Smart, dependable, always has your back. It's no mystery why they're the number one choice for RIAs who want to be the ultimate solution for their clients. With all the wealth services, technology, and support your firm needs, the difference is so obvious. It's Schwabvious. Follow the clues at schwabvious.com.
Hello, everyone, and welcome to the RIA Edge Podcast. This is, as you know, I hope by now, the podcast where I get a chance to speak to executives at RIA firms that are growing not just simply on the back of AUM appreciation, but building sustainable growth in their firms, bringing RIAs from practices to professionally managed businesses. And today I'm thrilled to be speaking with Eric Becker, the founder of Cresset. Eric, thanks very much for joining us.
Thanks for having me.
Co-founder, I should say. But do you want to, before we launch into our discussion here, for the folks who maybe are not familiar with Cresset, just give us the quick 101, the background, who you are, who you serve, etc.
Sure. So Cresset is a multifamily office platform that was designed by my co-founder, Avi Stein, and me and our amazing team for entrepreneurs, CEO founders, and families. And it was really it came into being because Avi and I were looking for a platform for our own families. We had our own family offices and had worked with wirehouse advisors for decades. And later on in life, we were looking for a platform that looked like Cresset. And when we couldn't find it, we started it for our own families. We were the first two clients. And so that's been the amazing origin story of Cresset, that it was started by clients for clients. So that would be the first piece. The second piece is that Cresset was designed to be a 100-year business. And so we have invested in and grown the business with the long eye, looking way into the future. So it can be multi-generational in the way that it serves our clients. And the third is that Cresset is an employee-owned business. It's about 60% owned by the employees, about 30% owned by clients who helped bring it into being, like Avi and me. And then it is owned about 10% by Constellation Wealth Capital, an outstanding long-term investor only in the RIA space.
Interesting. And they own about 10% of it. Is that?
Yeah, a little bit. I think a little less than that, between 9 and 10%.
Great.
Mm-hmm.
You know, it's interesting because as you know, in the wealth management space, the RIA space, the term family office gets thrown around quite a bit.
It does.
Everyone seems to, aspire to the family office moniker anyway. I was always under the impression that family offices were one, had a client of one, right? The family.
That's right.
And it was usually the investment manager sort of embedded in the ecosystem of that family, in that family's businesses and in that family's, extended operations. And then perhaps was rented out is too pejorative a term, but then, opened the door to other high net worth, upper high net worth clients to kind of, in a sense, ease the running of the business for the family that founded the family office. That was always my impression. At multifamily offices, I understand. How do you define a family office?
Sure. So most family offices actually should probably be called investment offices. Because they really are mostly focused around investments. And I agree with you that when you hear the term family office, you might mostly go to thinking of a single family office for a single family. And that could literally be from a man and his dog all the way to a firm that would be institutional in nature with a very large investment team. It could have 200 employees. Conceivably. But what's so interesting is that the way that we look at family office now, and when Avi and I were starting the business, it was, we felt the need to put family back into family office. Life is so much more than just managing assets. And in fact, what good are the assets if the family is in some way dysfunctional? So there's just so much that goes into it now. We think of it as investments as being one component. And so again, the investment office. Then we think of family. And with family, we're thinking of things like all of the administrative services that are non-investment that a family needs to operate, from bookkeeping and bill paying and consolidated reporting, and all things around technology needs and administrative needs for a family. We then think of things around how to be a highly functioning family. So family governance and education is a very, very big part of it. Having the right kind of meeting structures, the right kind of governance structures, and the right communication skills to keep families together. And of course, on the education side, how to educate future generations to be part of the family, to have a family mission and a vision for the family, to have a culture around how the family treats each other and operates. So all of that administrative education and governance piece. We also think in terms of managing the liability side of the balance sheet. So having access to private banking and lending and credit and risk management around insurance and other kinds of risk management like cybersecurity or physical security, things such as that. And then we think of things that make life better. So having resources around longevity and health and brain health, access to the very best healthcare, access to the very best medical intelligence when someone suddenly has a disease and needs to know where to go for the very best care. And lastly, we think of things that maybe bring that extra joy to life. So concierge services, travel and planning special events and all the things that go along with that. And then lastly, the third piece is community. We think that families want to know other families that are also on the same journey and to learn from each other, as we see in great peer-to-peer organizations like TED or YPO or R360 or some of these other Tiger 21, these kinds of learning networks. And so we've created our own community where we do educational programming like this podcast would be as an example. And we're doing that once or twice a week. And the programming is in all of the things that we just talked about that are the different parts of the family office, but it's also age appropriate. So there's programming for teenagers that might be children or grandchildren, 20s and 30s, and then for family members themselves on all of those topics. So it's a very comprehensive, our view is that it is a very comprehensive suite of services. And the way that we define it is that when properly executed, Cresset is the first call on any concern that a family has, and that Cresset, when we're at our best, we're powering and empowering our clients to be able to live their best lives and to focus their time where they wish. And so that could be for the entrepreneur on a business, or they've exited and they're starting a new business. It could be someone who wants to spend more time with family or has other interests. And so we want to make sure that we are giving our clients their precious time back when we're at our best.
And we all know time more valuable than money, right? It's managing the time is the yes. important time.
Time and confidence, reducing friction and frustration and worry. I think when you think about, I'm 63 years old, and when you think about life, when you can get time back and reduce friction, frustration, and worry, and have confidence in the system that you have around you, it's a wonderful blessing.
Yeah, that is great. You mentioned the 100-year-old firm. This was, I know, when you launched, maybe 15 years ago? Is that,
No, it'll be, we'll be celebrating our 8th anniversary in the next couple of weeks. I think the beginning of November will be 8 years old.
Okay. I had that wrong. For some reason, I thought it was shortly after I got here, the firm launched, but I guess maybe it was a few years after. So 8 years. When you launched, you spoke about this, desire to be a 100-year-old firm. I'd be remiss in not mentioning you just recently published a book, on the topic of how firms can become, longevity in the organization, the long game. explain to me a little bit about in the RIA space or in the wealth management space, why that kind of thinking is important. So you mentioned the stakeholders that you answer to as a family office, you and your co-founder. I can understand longevity for your family's sake, but why should RIAs or wealth managers in general who are building firms in the independent wealth management space think about longevity and growth as two important components to pursue?
Sure.
Does that make sense?
I think that's a wonderful, wonderful, essential question. The reason that RIAs should think over the long term would be the following. So the first is that it's actually kind of ironic, and that is that if you want to build a valuable, successful enterprise, a wonderful business, one that, let's say, you hope that someone may take an interest in, let's say that down the road they might be interested in building something of great value. What's so interesting is that by focusing on the long term and playing the long game, to use the title of the book, I think you actually end up building something that is much more sustainable, enduring, and valuable. And so that's so interesting, right? Because that narrative is that I'm in it for the long game, and yet that also makes your business that much more attractive. So I think it's very good, very wise to think of building a business that way. A second reason would be looking at it through the client eyes. What is it that our clients would want? Because our businesses are only as good as the happiness and satisfaction and the retention and growth of clients. And I think the clients are in it for the long term, as they should be for their own families and their kids and their businesses. The third is that when you look at the research around what it takes to build a very solid business, it's actually by investing in the business, being willing to invest ahead and thinking of the future, that you end up building something that can stand the test of time and has a strong foundation, which is essential, especially when times get tough. And one thing we know about life is that it is inevitable that there will be potholes in the road, or whatever definition you want to use, whether that's a recession, whether that is a pullback in the stock market, whether that is any pothole in life, that is inevitable. And you are going to be that much more prepared and resilient through those kinds of disruptive times when you are building something that has that strong foundation of the long term.
So a lot of advisors that we speak to feel that they get onto this road of growth that maybe is difficult to get off. We talk about the stakeholders that you have to satisfy. Now, you're a little bit of a different situation. You have employee owners, principals, and clients. Other wealth management firms have investors, private equity investors, or someone who's taking a stake in the company. And to satisfy all of those stakeholders seems to be an impossible task in a sense, right? I mean, can you grow and do all the things you need to do for your clients in terms of particularly what a family office does, such bespoke services, such high level client service in a large way? RIAs talk all the time about personalization at scale. Mm-hmm. Which strikes me as kind of two things that maybe don't necessarily jive. Personalization and a smaller organization, great. Mm-hmm. It's a scale organization is a different thing. Can you have them both together?
Yeah, I think you can. I think that there are a variety of ways of doing that. One is that we have an amazing team, and our advisors who are fulfilling that role of quarterbacking the relationship with our clients, are the CIOs for our client families, and manage wonderful teams that are supporting them and serving the families. They're very much providing a boutique, bespoke experience. And we measure this. And so we're every year we are doing studies with Net Promoter Score, where we're looking to see exactly what our clients are telling us on their satisfaction. We're doing employee and advisor engagement surveys, where we're also measuring their satisfaction with everything from the culture that we have at Cresset to the technology platform and all the things that go along with it. So measuring those things, I think, gives you an indicator as to whether you are accomplishing that goal of very high quality service, the personalization, let's say, that you were using in the question. But then how can we use scale to benefit the clients? And because the wonderful thing about the RIA is the fiduciary model, whenever we're able to secure benefits of scale, whether that is a reduced cost in a custodial relationship or a service provider relationship, or a reduced cost or more upside through a relationship with investment manager, or whatever that might be, a reduced cost in the family office administrative services side where we can facilitate something, the purchase of something or whatever, a service that a family needs at a more attractive price. All those benefits flow through to the client. We don't retain any of those in the fiduciary model. So I think that what's exciting about it is to be able to deliver personalization and an amazing experience at scale, and where the clients realize that some of this is actually coming where very few people are able to deliver it this way, because they either don't have the scale, or they don't have the technology, or they don't have the processes, or they don't have the amazing people that you need in order to do that. But it can be done, and it is being done, which I think is exciting.
Can it be done if you had an outside investor? I'm not suggesting you need to, or that's I'm sure you've looked at it. I'm sure people have asked.
I agree. I've been a lifelong entrepreneur. I did not come from this industry. And so, as I said at the beginning, Avi Stein and I started Cresset for our own families. We only knew the client side because we had been clients of wealth management firms for many years. And so when I think about that, investors are like neighborhoods. There are good neighborhoods and there are dodgy neighborhoods. And so I think the answer to your question lies in the type of investor and their reputation, their way of operating, their track record of adding value to the companies that they've invested in. And then the type of investment, is this a small minority stake, a large minority stake, a majority in control position? So the first thing is the type of investor. The second is the type of investment and the terms of the investment. And I think that depending upon those things, you can have a very successful relationship, and where that investor helps power a very productive growth in the business, adding a lot of value, both in the client experience and then also value in the firm itself. But as I said, the investors are not all the same. And if you have a bad investor, someone who is inexperienced, someone who is driven by short-term gain, if you have a structure that is misaligned of the different interests, then it can be a very negative experience, both potentially for clients as well as for investors and employees.
I think a lot of RAs take on outside capital because they want to grow by acquisition and need the money to do it. You guys do very few acquisitions. Some, you just did a big one that we can talk about a little bit, but or a big partnership with the investment firm there. But prior to that, in terms of bringing on new advisors, you've done very few acquisitions of other advisory firms. Is that true?
Well, it depends on the definition of few. What I would say is we have done probably one, what we call a culturally compatible, thoughtful acquisition, or many times we call them a business combination, because so much has gone into building that relationship and so much planning has gone into it that we think of them as thoughtful, culturally compatible, and really a combination of businesses. We've generally done, one a year. When you look at our 8-year track record, up until this recent strategic deal with Monticello, we were about a third of our growth came through acquisitions. About a third came from advisors who had left wirehouses and came and joined us, and then clients followed. And then a third would be pure organic growth, which has come from brand, traditional marketing, and digital marketing. And so that's been a really wonderful combination, a wonderful recipe for building a durable, sustainable business where growth is coming from different. It's one of the wonderful things about this business is the different levers that you have relative to the foundation and what it is that you're building for growth.
Yeah, a third organic growth. That's impressive. I don't think a lot of RIA firms can say that. Is that growth that is from new clients just walking in the door, or is it expanding wallet share of current clients?
Organic. So our definition of organic growth would be new dollars, either clients adding to their wealth, to the relationship, or new clients coming in through the door, exactly as you said. And that is something that we're committed to from the beginning. When Avi and I started the business and we were looking at other RIAs and learning about the RIA business, many RIAs had the names of the founders. And so we joked with each other about Becker Stein or Stein Becker, but we were very intentional on wanting to build a brand. We wanted to actually have a name that we could have a trademark and that we could, like a container, we could fill that name with meaning over time. And so Cresset, it was actually a lot of fun. We had a night with pizza and beer, and the first maybe 10, 12 team members brainstorming names and coming up with, quite frankly, lousy names, but having a lot of fun doing it. And then we found a firm called 100 Monkeys. And 100 Monkeys had named their business in, I guess, a little homage to how they think most people pick their names, 100 Monkeys throwing darts at the wall. And they came up with, after careful study, interviewing all of us, every single team member, looking at all of our material and our business plans, they came up with like 10 names. And they were really thoughtful, really interesting. And every one of those names had to have a trademark available and had to have a domain name so we could have a website. And the one that we picked that we love is Cresset. And Cresset is an Old English word that is the bowl that holds the fire. If you think of the Olympic torch, the bowl that holds the fire on the torch is called a cresset. And so we thought that was a wonderful metaphor of lighting the way for our clients and for our employee owners. We're lighting the way and trying to build something special for the future. So that was intentional. We wanted to create something that could be multi-generational, and we knew, Avi and I both knew that we were that the two of us were only going to be here for some finite period of time.
Yeah, that's why it's prescient. You're right. I mean, a lot of advisory firms have given up those names as founders and changed their names to something more lasting. One of the things that you wrote in the book on when it comes to growth, is that you have to know how much to expand and also when to slow down, right? You do. Sometimes you get the formula right, maybe you get lucky, but if you're in expansion mode too long, people start to burn out, mistakes are made, and things start to break.
Yeah.
How do you, as a leader of a growing firm, decide how far to push the accelerator, how far to take your foot off the accelerator? Where are the constraints that maybe are not allowing you to grow as much as you want, or how do you think about growth inside the organization to avoid that burnout and organizational stress?
Sure. It's a great question. So when Avi and I and our leadership team go to work every day, the first thing that we think about, or even when we look at our to-do lists of all of our activities, we think about culture. And I think culture is the most powerful thing about a business. It's everything from the way we treat each other, the way that we treat clients, the values that we hold so dear, and it's a way of being. So if you think about that, you're going to have a sense of where you have pushed growth too far, or maybe the growth has outstripped the structures, the operating platform, the very things that you've put in place, and growth has now outstripped those capabilities. So I think the first lens is through culture. And the second lens, when we go to work every day, we think about people. And so you will then see it in our people. Of course, worst case scenario, somebody would quit, I would imagine, if it gets too much. But we're really trying to avoid that by everything from the surveys that we do internally to being present in our 25 offices, traveling and spending time we move our leadership meetings around. I'll be headed to San Francisco on Sunday for a week, and we'll all be together in San Francisco, and we go to our different offices as a leadership team. And so I think being really tuned in to our people, and of course, in the category of people would be clients, and we get that feedback from clients too. So this report isn't right, or I've detected this this issue with service or whatever it might be. The third thing that when we're looking at our to-do list is around numbers and measurement, and what are all the tools that we have that we can look at and see where maybe growth or other issues might be challenging us. And then the last piece, the fourth pillar of this operating program is business model. And that is having a sustainable business model that is set for growth. And I think those are the different lenses through which you look at this, and then the different tools that you have from on the people side to measuring through surveys or other tools, and you get a sense to what's going on. And at the end of the day, it really means confronting your reality every day. And where people tend to go wrong, and having Avi and I both having been lifelong entrepreneurs involved in so many businesses, probably 150 different businesses over our careers, you see that when people don't confront their reality, that's when mistakes are made. And that's when you see things break. And those can create significant setbacks. So you have to really be tuned into it. And growth is amazing, but it's just the right amount of growth. And that's the essential thing you have to dial into, just the right amount of growth to create enough opportunity that you can attract the very best people and then retain them by providing growth opportunities. Just the right amount of growth to generate the returns that investors are expecting on the capital that's been invested in the business, or if it's a founder, purely a founder finance business, the capital that the founders have in the business. Just the right amount of growth so that clients feel the benefits of the growth in scale and the benefits that can come from scale without the negatives of service issues or other problems that come where it doesn't feel like a boutique experience anymore. So just the right amount of growth and confronting your reality every day is the way to manage the issue.
Yeah, it's interesting. It's a walking a nuanced line that maybe is more intuitive, really, than it is found in a spreadsheet.
It's not found in a spreadsheet, although I do think that there are key indicators that will tell you that there could be issues, and a lot of that comes through very good listening, but also other tools where you'll see issues. And you can also see it even sometimes on the P&L, where an expense line will suddenly soar because there are Band-Aids and other things that are pouring in to try and address some sort of a root cause. And as I said, you have to confront your reality every day, but your reality isn't just one particular thing. It really is the culture of the organization, the people, which are the people delivering the services, and the clients that are receiving the services, and the service providers that you're using. It's the numbers, which is we have to measure what we do. We have to produce measurable results. And then lastly, it's thinking about your business model, because this is an industry that is changing dramatically. The most recent one being AI, but it's been changing, for decades now. And being tuned into that and making sure that your business model it fits the times and it fits the future, and that's really, really important.
In your the book, your prescription for building long sustainable companies, you talk about the collective purpose that the company needs, right? That bit around culture that we've talked about, but also the ability to embrace disruption. And to stay ahead of technology changes and to not be afraid of pivoting quickly. You can do that as a smaller, nimbler company, a little harder when you're larger. But explain to me a little bit about the importance of that. I mean, is it
Sure.
Is it simply a new technology? Is a new CRM thing has come off the shelf? We got to plug it in, or what is the kind of disruption that we're talking about here?
Sure.
in our
So,
space.
yes. I mean, disruption goes along with humanity, and there was disruption even before. But it is, if you look at history, you see everything from economic cycles and political cycles and all different levels of change throughout history. My interest in this topic came about 30 years ago when I was living in Baltimore and part of a business. And I was reading our business newspaper in town, and they had the list of the oldest companies in Maryland. And there was a company, a small family business called Loan Brothers, that was almost 200 years old 30 years ago. Pretty incredible. And when I was reading about them, I was just thinking about all the things they had lived through, like wars and not just recessions, but depressions and incredible changes in technology and economic disruptions and political change and everything, and family crises with individuals that happen in a human life. It was just incredible to think about that a small business actually would have the resources. So yes, they can be nimble, as you said, but how do they make it through many times being operating on a lean basis and not having a large capital base? And so that was really fascinating to me. And that started this work, which was initially a hobby and now has been put together in a book, which are what are the practices, the processes, the lessons learned that these long-term families, organizations, and companies have done to allow them to stand the test of time. And the first one, which is so interesting, is this myth-busting mindset. When people think of long-term organizations, they kind of tend to think of stodgy, bureaucratic, older, slow to move. And the irony is that nothing could be further from the truth. These organizations that have survived all these things that I just listed, that has made them more resilient. It's in their DNA, and they know when to recognize what I now call moments of truth and moments of trust, and they're able to identify those and take action. And they don't always take the exact right action. Sometimes they make mistakes, but by taking action, more times than not, they actually are able to move the business forward and to then address what it is that they're trying to overcome. And so it's a fascinating area. And whether you look at it in terms of our human lifespan or whether you look at it in organizational lifespan, I think scientists say that a human might make 1 million decisions in a lifetime, could even be more. And this is everything from the very simple things of, what to eat at your meal, all the way to really big things of who am I going to marry? Where am I going to live? What's my career going to be? And these end up being these moments of truth and moments of trust. Who am I going to trust in this particular moment of truth? And in a whole lifetime, there might be 15 to 30 of these. And it's same in organizations and companies. You can actually see over like 100 years, 15 really, really important moments of truth where they made a decision and it just changed everything for the better. So it's really, really interesting. And that's why this concept of confronting your reality every day is so important, because it puts you into a position to be able to recognize when it is a moment of truth and to actually take action.
So you're almost setting me up here. I have to ask then, what has been the most recent moment of truth for Cresset? Is that an easy one to answer?
Yeah, I have the very first thing that comes to my mind is Stewardship. And Avi and I here, the business will be celebrating its eighth anniversary. And Avi and I have already established the next generation leadership for the company. And I think that is a huge moment of truth and very, very important to Cresset's future for both clients and for our team. I think some of the other moments of truth, one would be the establishment of the business at the beginning and being started to fulfill a need that Avi and I needed for our own families, and then turned out to be, for us, a very big white space that we found where there was this tremendous need for a whole suite of services that would be integrated and holistic and delivered on one platform, and would be delivered by a highly motivated team that had an amazing culture. That was an absolute moment of truth, and it set us up for the growth and really all the wonderful things that have happened since then. So I think those are two, one at the very beginning, and then one that would be most recent, which is establishing through good stewardship and ethical succession how this organization will be running long after Avi and I are retired, whatever the definition of retirement is.
Sure. Yeah. And I know that you all did elevate a bunch of executives to leadership roles there recently. Some even from the RIAs that you've acquired, right? That came in through
with great pride. I mean, I think when it's amazing when you look at our leadership team, I think there are a number of things that stand out. The first would be the diversity, and in particular gender diversity. I think that Cresset has been a leader in how we've put together our team, and the diversity we have of everything you can think of, diversity of opinion and diversity of the people sitting in these seats. I think the second is what you just mentioned, which is that as we've done these culturally compatible, thoughtful combinations or acquisitions, we have been able to take key people from every firm that we have done a deal with or created a partnership with, and they have then had growth opportunities. And so whether most recently that was CH Investments, Crow Holdings Investment Partners in Dallas, Texas, and Mike Silverman became our CIO, and our founding CIO, Jack Ablin, became Chief Investment Strategist for the firm. And so whether that is one example, and you can find examples in every single business that we acquired. So that is, I think, also very notable. And the third would be the test that Avi and I both tell our wives, this is the best group of people we've ever worked for. And, we were both later in our careers and have worked with a lot of people over a long period of time. And so to be able to tell your family it's the best group of people you've ever worked with is a wonderful indicator of the talent and the character of the people we work with.
That's great. We're getting coming to the end of our time here, and I could speak about this stuff forever. But let me just ask you one more quick question. The recent deal with Monticello, I'm maybe not a pivot, but could you maybe put that in the context of the future of Cresset? This was not a small deal. They're a big firm.
No. Yes.
Institutional focused. What does this mean for Cresset and the future of your organization?
Sure. So my co-founder, Avi Stein, had an amazing multi-decade relationship with Grady Durham, the founder of Monticello. And they started talking about the future and succession, all the things that you and I've just been talking about. And that led to this wonderful combination where Monticello joined Cresset in a strategic relationship. It brings to Cresset a lot of additional strength in investments and research. It brings strength to Cresset in the ability to serve endowments and foundations. And it also brings both a large group of single family office clients and a platform for serving very, very large, call it enterprise class, single family offices with the services that they need. And then for their clients, this family office services platform that we've built with all those services that we spoke about earlier, those are now available to all of their clients as well. And they have access to our investment team and our research, and bringing that all together under one umbrella, we think is a very powerful combination. But it really started with a relationship, and that is Grady and Avi's relationship, which then became a relationship between the firms. And so I think it's a wonderful strategic combination. It's a wonderful functional and beneficial relationship. And then I think it's a cultural combination, and one at the core that's based on relationships, which is really wonderful as well. So very excited about that and our combined future.
All right, well, that's fantastic. Eric, like I say, I wish that we had more time to keep talking about this stuff, because I could talk about it all day long. And I know you're passionate about it, but I appreciate your time speaking to us, and for giving us a little bit of insight into where you are with Cresset, and congratulations on the book. I think it's great. A lot of good stories in there, a lot of different companies, from across different industries, kind of unlocking the secret of what it gives them their longevity in the space. So thank you for talking to us, Eric.
Thank you. I really enjoyed the conversation, and thanks for having me.
And thank you for listening.
If you're an RIA or looking to become one, Schwab Advisor Services is the Watson to your homes. Smart, dependable, always has your back. It's no mystery why they're the number one choice for RIAs who want to be the ultimate solution for their clients. With all the wealth services, technology, and support your firm needs, the difference is so obvious. It's Schwabvious. Follow the clues at schwabvious.com.